Hello and welcome to this week's planning and scanning session. The first thing we try to do is to go through the condition and health of the different various stock indexes that we're looking at. As many of you know, that the New York Stock Exchange Composite Index, the NYSE, this is the one that most people get access of information that's traditionally measured in terms of advanced decline information. Many of you are familiar with the ARMS index, the McClellan oscillator, and so the information is taken by from the NYSE. Now, this is an advanced decline comparative ratio line on the NYSE. One of the reasons we don't truly trust this one index alone is because over 50% of the stocks contained in the NYSE are preferred interest rate sensitive stocks, as well as bond funds, which are valued in price. So if bonds go up and stocks go up, we may get obviously a over accelerated or a false reading that there's more undertone strength in the market. After all, there are periods of time when stocks and bonds do go up in tandem, but then there are times where stocks go down, bonds go up, and that perhaps if you had few stocks going down, bond funds going up, the advanced decline won't give you a true reading of the breadth of the market. And so with that logic, that's why we over at Person's Planet, we have created several indicators. And number one, what we've created is on both TradeStation as well as Genesis here, what we've done is we've created the ability to look at the advanced decline. As you can see here, this is advanced decline comparative ratio line on the S&P 500. And so with that said, bang, I have now the 500 stocks measuring their advances versus their decliners in that stock index of itself. Now, in here we have the on-balance volume and the volume histogram, which many times you do not get true actual readings. A lot of times you get rallies that are on light volume, but this is one of the very few times it's kind of interesting that this rally is showing light volume, both in the terms of relationships of the advanced decline analysis as it relates to on-balance volume over time. All right, what do I mean by that? Well, the last time we had a high reading of both the advanced decline as well as the on-balance volume was back on the highs posted on the close of September 18th. If you'll note here, this was the level reading in the on-balance volume. Price is considerably higher. As you can see, as I'm just going to take a close to close, you can see that the market has advanced from the October 15th high. You can see that we are making a newer high in price, but we did not do it with an accumulation of the on-balance volume reading. Next, we did, though, make a very strong move and breakout with the advanced decline, which means more stocks have participated in this rally and caught up. Now that means one of two things. Either the stock market's very strong with no volume behind it, or perhaps it's too strong and we are susceptible for a pullback. I'm in the camp that we're too strong and susceptible for a pullback, and there are numerous indicators that I share that show me that analysis. Number one, we look at not just the S&Ps, we look at the NASDAQ, and it has the same similar makeup. Next, we have with the lack of volume behind it. Next, the Russell, which we were pretty strong about in getting into long positions with the IWM after we bounced off monthly support here. The advanced decline accelerated, the volume accelerated, but again, from these high readings when we were at this level, we've made higher prices. As you can see, we've made from the last peak value, you can tell we've made higher highs in value, but not in the on-balance volume reading, and we barely took out the AD line. So we've got the blue chips as represented by the S&P 500, the NASDAQ, we have the Russell, we have the NYSE, and of course the Dow Jones Industrial Average. And we take a look here and we say, oh my goodness, yeah, there's like no volume behind this, but most of the 30 stocks have made newer highs with the advanced decline readings. So with that said, what's left and who's left to take the market higher? Now let's take a look at another, as we talked about in our weekly planning and scanning, and that's our weekly observations. If you note here, I'm just taking a review. Let's take a look at the McClellan oscillator. Let's take a look at the specs. Let's take a look at the diverging volume patterns, which we just did, and then the seasonal weakness as we get into the third week of November. That's what I want to discuss and why I'm coming up with this kind of apprehensive attitude with the equities up here. All right, this is the McClellan oscillator. Typically, the McClellan oscillator, which does take information based off of the New York Stock Exchange Composite Index, a zero line reading, anything above zero signifies strength. And of course, we did get a zero line reading, and we are starting to work off an overbought condition in the market with the McClellan oscillator. We were at over 263, and as you can see, currently we're at 143. So the market is really not going down, but the readings on the McClellan oscillator are reflecting a little overvalued. When we get back down under, or at least a zero line test, that will be when we will be a little bit more prominently bullish in the market, or maybe possibly we get oversold into the negative 200 region. Another thing that we note is that the spread percentage ratio difference between spiders and NASDAQ, the S&P 500 and the NASDAQ, is incredibly strong. It's actually too strong. It's really widening, and typically when we see periods of time when we widen by that percentage amount, we do come into periods of correction. So we wanted to note that. So that is another area of concern. Next, this is the Commitment of Traders report. You can clearly see that small specs are positioned in green, large specs, the hedge funds are blue, commercials are red. This is a zero line histogram. Anything north of the zero line means they're net long. South of the zero line, they're net short. So with that said, what you see here is that the small speculators are the ones that are really net long the market at these highs. And so odds favor the fact that the small speculators are not the ones that you want to follow in this type of environment. And so therefore, I would say that the fact that we've had this light volume rally and they're net long held by the small speculators here, as indicated by the green, it suggests that either we're going to see a pause to the upside or at least a correction in the near term. Now, we had a Republican sweep in the House and the Senate. And one of the stock sectors that really performed well because it's been under pressure has been the coal sector. Note that Peabody Energy had a surge to the upside on strong weekly volume. We broke out to the upside. But, you know, it wasn't just a Republican sweep. It's also a seasonal time frame for that market to go up. And we also had some divergence in volume patterns. In other words, look at the monthly chart. This stock just got sickly destroyed in price. We had significant lower pricing here from last year to this year, but yet with the on-balance volume reading, we had higher or equal readings. This suggests that we are in a bottoming phase of the market, and so people can look at pullbacks in BTU, which would be suggestive of areas down near this 1085, 1090 area as a buying opportunity. Next, you had another stock in that space, the coal sector. This is one that's very interesting because, as you can clearly see, while everyone's anti-coal because of its lackluster or its anti-environmental, it's not a clean-burning fuel source, but note that the volume on the monthly, this is one of the weirdest volume divergences I've ever seen on any product in a long, long time. So looking at the monthly accumulation of Arch Coal ACI, but the potential for the low to be posted as a high closed doji with that type of volume convergence, bullish convergence, is very powerful argument not to be short this stock, but maybe look for pullbacks here as well if it gets back down in the 220 area. At least it would offer a low-risk trade in a seasonally strong period of time, as you can clearly see. That's the seasonals on Arch Coal. Next is Alpha Natural Resources. Alpha Natural Resources does not have the makeup of the volume divergences on the monthly, but it does have a strong seasonal. Another stock that I think that's one AMZN, Amazon, we talked about this, is that Amazon, I think, is if we can get some volume going, it has a strong seasonal tendency to bottom out now, the week of November 7th, and it stays strong going into, as this chart will show, it stays strong going into the end of December until about the 1st of January, and then it sells off into February. So if we can get we had a high closed doji set up on Amazon, and we're seeing some follow through the upside. But I would say one way to play this is look for confirmed higher high breakout, a move above 308, or because the lackluster volume on the weekly chart here shows, I would hope to see maybe we get lucky and see a pullback to like the 290, 288, maybe 285 area. And, and so the daily on-balance volume shows some aggressive, as you can see here, this little semicircle of volume. It shows accumulation of position under these lows. The weekly volume does not confirm that. So one of two things need to happen. We need the market to either A, go down and give us a daily buy signal near support, or B, break out and give confirmation of the upside. I think that by the end of the year, you'll see Amazon easily back up over 356, and that would be almost an 18% move from its current levels. A very sweet move, and very good if it did occur and you were able to capture that move as an option trade or as an end-of-year trade. Note that on the monthly chart, there's a lot of longer-term buying, as these monthly charts demonstrate with the long tails. Every time the market gets down there, it gets sucked back up. It gets down here, and so now it's in the process of getting sucked back up. Likely area of where it will get back to, at the very least, testing up at this upper band of resistance, which is near the 350 handle. Now, let's look at one other trade. You will note on the screen I have long weekly stocks on my scan, and you will see that there's a bunch of names in here. One is Walmart. Funny thing is, Walmart has earnings out this week, as does Macy's, which is on our list. So Walmart's at the top end of a longer-term trading range. The volume, to me, looks more indicative of a distribution top. And the weekly, as we are starting to see the market break out to the upside here, as you can clearly see the breakout, the volume to me looks more, even on a weekly basis, more of a, not of accumulation nature, but more of distribution, light volume rally. So to me, the stock in Walmart may come out with, it kind of has the sense that, as you can see on a daily chart, the volume analysis suggests that the market is, as it is near its old highs, volume is not participating to maybe help push this to newer highs. So to me, this might have more of a flavor of a disappointing earnings announcement, and so that I want people to kind of watch for this week. Resistance in the week comes in around 80 up to 82 with monthly resistance, and we are already near a quarterly pivot resistance, or just beyond it at 78.70. So Walmart could come out and disappoint. To me, the longer term charts do not support higher valuations based on that volume analysis. Macy's has had an amazing run, and unfortunately, I would have to say the longer term volume absolutely shares that same sentiment. We are making and trying to get up to the highs, and we are well off the volume levels, both monthly, weekly, and even a daily basis. It's kind of a sad volume story there, as you can clearly see. So Macy's, unless they really come out with a major surprise to the upside, keep in mind Macy's earnings will be out on Wednesday before the market. So if you are looking to participate in possibly a bad news story here, Macy's, you'd have to be positioned in a trade and an option prior to Tuesday's close. With that said, that concludes this week's Outlook. We are certainly looking forward to the a correction in the S&Ps. I think should not, we'll see by midweek, and if anything happens, keep in mind to focus in on updates via our Twitter. We actually post some decent tweets out there, and so for you folks that are part of our community, if you note here on the side of the website, we talk about different markets, and of course, we talk about what we're following up with our weekly planning and scanning, so you'll know what we're talking about and kind of the trades that we're looking at. And of course, as always, if anything happens as a member of our trading community, we will send email alerts out as well. So anyway, thank you all very much, and I hope you found that information useful, at least good technical insights as the condition and the health of this market up here. Thank you all.